Michael, let's sort of continue the conversation that we were just having with Sam. What's the secret sauce? What are the differentiators that are most important in the fintech space now that are even worth buying?
That's a good question. I think one thing we've seen in the market in the last couple of years is we've been in an enormous transition from a growth mindset and growth at all costs and focus on user counts and revenues to profitability. I think what we're going to see in the near term is actually a pretty big and sudden shift from that growth mindset to a profitability mindset. That's going to be really hard for some businesses to do. And given the amount of investor uncertainty out there, I think we're going to see companies that have been burning a lot of cash need to turn to a cash-rich partner and potentially make a deal. So I think we're going to see a different deal market in the coming 3 or 4 years than we've seen in the most recent couple of years.
Okay, so I understand why some of the smaller players need the bigger players' cash to make a deal, but why do the bigger players need the smaller players, or which ones do they need? I've got questions about, I still think one of the biggest distinctions of this era for retail was just this technology that made it easier to take risk and maybe to understand what options trading was factually, but maybe not understand the risks of it. Are there certain platforms that you think really did educate users and therefore have this sophisticated, younger, early user base that's going to be valuable to larger players?
So I think there's a lot of disruption that's happened here. I think the biggest thing that the bigger players need to get is they need to try to win the future and get consumers engaged with them earlier in the life cycle. So if you look at where younger Americans are signing up or engaging with financial services, it's much more likely to be with a Robinhood or a Cash App than it is to be with your local community bank or a legacy wirehouse. I think what we haven't seen bridged yet is getting that older generation that has most of the capital still to actually decide to trade off and go with a app-generated financial service provider. We also haven't seen really a lot of activity moving, as you guys were saying, from a point solution that's really generated around winning a lot of customers quickly to more of a suite that's going to start to generate sustainable revenue.
Michael, we keep going back to sort of the premise of Robinhood from the very beginning, and certainly in focus during its IPO, and that is the promise of its young, active user base. Why do you think that hasn't come up to fruition or sort of lived up to those expectations? Why aren't its users buying into other financial products on the Robinhood platform? Is that sort of an indication that Robinhood's team hasn't executed that maybe someone else could?
Well, I can't speak to what Robinhood's team specifically has or hasn't done. I think what I can say is that if you look at the average, distribution in America, the younger customer base, which is much more likely to be on a Robinhood or a Cash App or a Webull, they just don't have the same amount of assets or same amount of lending needs that the older generation does. So we have a real big mismatch in the United States between who's using app-based financial services and, frankly, who has all the money. And so it's very difficult to get a 65-year-old who might have, $1 million, $2 million in their account to actually decide, I need to migrate those dollars over. And at the same time, you really can't take, mid-20s, users of app-based trading accounts and rapidly transition them into savings. They frankly just don't have that much savings. They sort of look like the average American.